Now the S&P 500 just touched an intraday record high. The Dow was already there. The Russell 2000 touching a record high as well here as we get what started out as a decline in the major averages, particularly in the NASDAQ in the wake of the Georgia runoff election and at least half a decision that we have there on the Warnock-Loeffler race, the Warnock bested Loeffler. Really, it's been an interesting reversal in this session. Part of it has been driven by what's been going on in the financials because we have the 10-year yield rising on perhaps the outlook for more stimulus, and then the banks are following suit. We've got the XLF, the financial ETF, that's also on the rise. And guys, this is an interesting effect here of what we've been seeing go on. I mean, listen, even if the Democrats take the Senate, there are no guarantees in politics. There's no guarantee that they're going to get more stimulus. Nonetheless, it's interesting, this tone and this switch in tone that we have seen the markets taking, Myles.
Yeah, I mean, it's funny. You sort of wonder, is this the day after the 2016 election, or is this after we just confirmed that Democrats are going to have control of all three houses or all three branches of government? Because it's very reminiscent of sort of how the market acted back in 16, and it's a pretty straightforward cyclical rally here. All else equal, and again, it's never quite true, but all else equal, steeper yield curve is going to be better for banks, and we are certainly seeing that action today. I mean, KBW Bank Index right now is up 7%. You look at some of the individual plays, and again, broadly speaking, the smaller the bank, the bigger the rally today. Fifth Third, that stock's up 9%. KeyCorp's up 9%. Comerica is up 9%. But the major money center banks, Bank of America is up 7%. Citigroup, that's up 6.5%. Wells Fargo is up 7.5%. All these names are rallying, and we should note, even with these rallies, these are names that are still being left behind or have been left behind, not just this year, but over the last several years. And so it'll be interesting to see how much more steam is in this trade because, I forget which analyst said it, and I'm sure it's not unique to whoever I heard it from. It might have been Dick Beauvais. It was like, all else equal, banks are a levered bet on the economy. So economy's going to do better. Banks will do even a little bit better than that. So with that outlook, we're certainly seeing that action early in today's trading session.
Yeah, I think what it boils down to, if there's more steam in this bank trade, is if the 10-year continues to rise. 10-year goes up, maybe banks make some more money in the first or second quarter. Earnings estimates on the banks go up, powers multiples. That might be what the market is thinking. But I do want to call attention to another trend I've been watching. Maybe me and Julie have been watching it too. The downgrades or the cautious comments on some of these food players. Coca-Cola, third downgrade this week. PepsiCo it's had its rating cut this morning too. Conagra earlier in the week downgraded to sell. So you're starting to see, I think, Wall Street try and position some of these stocks that worked well last year in the work from home environment and try to get out in front of potential growth slowdowns in a lot of these names in the back half of the year as we maybe get more mobile again.
Yeah, imagine that, a little bit of rotation away from defensive or what had been defensive into these more cyclical names. It's worth mentioning as well that a lot of people that we have had on in the past, say, month, they've said they like those financials. So we see that sort of playing out here. That's been one of the popular groups that people have picked as one that could do well this year. And indeed, those percentage increases are pretty incredible, particularly for some of the large banks.